Let me ask you about that, because a lot of people, because it's so complicated for them, whether you're talking taxes or just investing period or both, they rely on financial advisors. I think you use the figure 40+%. For those with more net worth, it's 80+%.
Yes.
So they rely on other people.
Yeah.
To sort of put it together, but a lot of them are getting screwed on these fees.
That's why I wrote the book also.
So how do you, if you need that expertise, but you don't want to deal with the fees, it's a conundrum, right?
Well, I have a site that you can go to and find out what your fees really are, so then you can negotiate or move on. But I have a co-author.
Or you can just go the Vanguard route, right?
Yeah, you go Vanguard. I have a co-author, Peter Mallouk. He's picked by Barron's 3 years in a row. No one's done this in history. As the #1 financial advisor in the United States. 2 years by CNBC as #1. And this year, Forbes.
What is it?
CNBC. Yes, I think you know something about those
guys.
Okay,
good. I was just checking that out.
I know, I understand.
Oh, right. Financial channel. Right, gotcha.
But the point is, he will do, I convinced him, he does like a family office for millionaires, not just billionaires. And I convinced him to take that same process, build a division, and do it for people that have as little as $100,000 to get started. Or you can go to Vanguard. But you need an asset allocation broken down to do what you said. These great investors, I interviewed Warren Buffett, Carl Icahn, Ray Dalio, the people's amazing. But they all are different.
How do you know they were giving you their insights, though, and not saving it for their...
Well, you can go test them.
Fooling you, right?
Like Ray Dalio, you can go test what he did for 75 years.
No doubt. I'm kidding you there. But I did want to get a handle on this, because a lot of it you talk about how the power of compounding and how you make a lot of money. Fine for young people. But for older farts out there, they're hearing you and say, God, I missed the boat on this. You always hear about these Americans, what is it, 2/3 who have less than $1,000 saved?
Yeah, I know.
What do they do?
Well, here's what you have to understand. Every year we have a correction since 1900. Remember last January, the worst opening in history, and we have a record-breaking year. 80% of those do not become a bear market. Bear markets come. They last a year on average. They cost 33% on average, some a bit more.
Well, there's an argument by the longer it takes to get to the next one, the bigger the hit will be.
Yeah, I agree with that. But it's still an average, right? But here's what you need to know. Every single crash, every bear market in American history for more than 2.5 centuries has turned into a bull market immediately. Remember 2008, we lost from peak to trough 50%. And where to go the next 12 months from March 9th coming up? It went up 69% in the next 12 months. So if you didn't sell, you're up 70%.
But people get that fear, right? I remember the late, great Peter Lynch, not late, great, it's a lot, but Peter Lynch, who looked at what was happening to airline stocks and everything after 9/11. He said it makes no sense that American Airlines and Delta are trading at pennies on the dollar. So he believed in them and believed in American capitalism, but it takes a strong gut for that.
It takes Unshakeable, but you don't have a strong gut if you educate yourself with enough of the facts to where you start to say, I don't have to time the market. I just need to be in there through time. It's Jack Bogle's get in there and stay in there and do nothing.
So what do you think of these asset, you didn't touch on it, but the asset builder accounts based on your age, the closer you are to retirement, the more...
I think it's wonderful to get an asset allocation, but most of those cookie cutter elements like your age in bonds are made up overly simplistic. We got to know what your goals are and how much time you have. That's how you have to make the decisions. And we've got to educate.
Well, we never know how much time we have, right?
Well, how much time before you're going to want the income.
But the more time, the better, right?
Without a doubt. But Peter will do, if you go to getasecondopinion.com and he goes, getasecondopinion.com, make sure I said it right, he'll do a plan for you. And if you decide to become a client, it's less than 1%. And if you don't, you have a plan for yourself. So we also give people a way to act on it if they want to.
Just simply just putting it in an aggregate, like the Dow or the S&P 500, we'll sure do that, and just invest in that.
You absolutely.
Dollar cost average with that and be done with it.
You can absolutely do that, but if you...
But you're not going to get very rich.
Well, no, if you want to maximize, you want to have an asset allocation that probably has some alternative investments. Ray Dalio said something the other day. Ray Dalio said something the other day I thought was brilliant. I was in a room at Robinhood. Everybody thought it was brilliant. I talked to him about it afterwards. He said that his secret is reducing his risk. All these guys look for asymmetrical risk reward. How can I have the least risk to get big rewards? Most people I think I have to have big risk to do this. And
or they take big hunches. But in this case, on Donald Trump, lately. That's what they've been doing. Is that wise?
Well, I'm not going to say it's wise or not wise.
I'm not talking politics, but they're talking about what he wants to do with cutting taxes, cutting regulations.
I think
that is a way to make money.
They certainly saw it. But over time, they developed systems that allow them to be asymmetrical. And Ray Dalio's whole approach that he said to me, he said, Tony, you just got to look at it from this perspective. He said, whatever asset class you're in, no matter how great that asset class is, and everybody who graduates to what they knew. If as a kid, your parents fixed homes and spun them, and you didn't have a lot of money, but you do real estate, or you do stocks if you had given stocks when you were little. He said, but every asset will drop 50 to 70% at some point. So you can't have that happen late in life and have everything in a single asset. So I show you.
So should they be in largely conservative ones at that stage in life, or what?
Yes, you want to be more conservative as you get older. We all know that.
Right.
But again, it depends on what is your psychology, what's your risk tolerance, what are your goals, how much cash flow do you have, how much time. So it's different for every person. Anybody's giving you a cookie
And
cutter.
some are more devil-may-care by nature.
For sure, without a doubt, without a doubt.
What are your thoughts? You don't get into this, but you talk about vagaries and history and all that, but the Trump rally, do you buy that? It's a Trump rally?
Well, it has been a Trump rally because the market thinks forward, and they're saying, look, there's all these benefits since he's positive towards business and regulations in the financial area. But right now, everybody's betting on the change. If the change doesn't happen, there's going to be some adjustments being made in the market. As you
It's a very good common sense treatise. I could see with the who's who of people talking to you and providing insight on this. A lot of it is common sense. Unshakeable, your financial freedom playbook, creating peace of mind in a world of volatility. We all are capable of it, but we let our minds get in the way.
Yeah.
And then we don't get happy. Right?
And I think that's the last chapter, is to show you that money doesn't change you. It makes you more of what you are. If you're mean, you got more to be mean with. If you're giving,
it might not buy happiness, but it can certainly buy a little bit more content.
Up to $75,000, the research shows it changes your life. After that, it's a game in here and in here.
You're right. Tony Robbins, great seeing you again.
Thank you
very, very much.
Thank you for having me.